Happy Tuesday. Can you hear me, Rodney?
I'm not sure I understand.
Can you hear me, Rodney? Mm-mm. Call me back in.
Can you hear me?
I can, yes.
All right.
Can you hear me?
I can.
Oh, wonder what happened. Okay. So you're doing good today?
I'm doing now that I'm actually in here. Yes.
I've got a little, must be Tuesday because I'm sweating profusely at 1 o'clock. I don't know what that's about.
Yeah, it's because one of us can't ever log in or something, and it's usually me. So,
Well, now it's all cleared up, so good for us. Hey, so for anybody that tunes in, that is going to be tuning in later, I've got an announcement to make. Rodney and I do. Did you get that run of show I sent you a few minutes ago?
I did.
Okay. Oh, good. We've got somebody signaling, and so Rodney and I are we had a chat the other day, yesterday, and we're gonna change things up a little bit. So let me say something here, and then I'm gonna ask for Rodney's thoughts. This is a little bit programmed, so for those of you who have been with Rodney and I for a while, we want to let you know that we're changing things up just a little bit. In the original Dollars and Cents podcast, although we loved sharing our thoughts on the headlines in our respective industries, mine real estate and Rodney's, of course, mortgages, we'd like to pivot now to providing fast answers to people with pressing questions. I mean, in this day and age, people want instant answers. I mean, I do too. So, for example, for homeowners, be it first-time home buyers or somebody who hasn't bought in a while and has forgotten what the system is like, how things work, they might be asking a question, what kind of loan options do I have today and which one is the best for me? Those kinds of folks are out there. There's millions of them. Or someone may ask, what paperwork do I need to have ready in order to get a loan? Because sometimes you'll find a house and you'll want to buy it, but you've got the issue of you need to get that loan ready. And paperwork is generally standing between you and signing the closing documents. Or another question is, how can I improve my credit score to get a lower rate? That's a real popular topic. What kind of loan is the best for an investment property? That's going to be a really popular topic. What Rodney and I are going to do moving forward, and I'm calling it for now because I can't think of anything better, to be honest, is Dollars and Cents Fast Answers. And that's the way it'll be titled for now. But there's a million little questions out there that can stall the buying process and sometimes is intimidating, in fact, like the paperwork question. For a lot of people, they won't even call somebody initially because they're so intimidated by what they imagine that the paperwork can be. And can it be complicated? Well, not if you have somebody that knows what they're doing explaining it to you. Doesn't mean it's a piece of cake walk in the park necessarily, but we'll help you through the process. So sometimes those little questions can stop the buying process, and we want to get fast answers to those people so they can move forward. And I know I'm that way when I'm looking for answers on YouTube. If I want to fix something, I don't want a lot of this going on in the beginning. I just want my answer so I can move along with life. So Rodney and I will ask and answer those questions directly. And we're going to have questions that we'll come up with initially. Hopefully people will help us. Hi, Ange. But here's the goal, and it's kind of the punchline, and I'm almost done. But I felt I owed it to people that are used to our normal banter. I wanted to fill you in this way. But the goal is to create a catalog or a bookshelf on YouTube in my channel of commonly asked questions with fast answers that people can use as a reference so they can come back time and again. If you get lost in the process, you may be able to come back. Now, remember, if you get stuck or if you have questions, please give us a call. Our contact information is going to be in the description box and in the comment section. So don't let being stuck be the reason that you stop. call Rodney, call me if it's a real estate related question, and we'll help you through it. But because it's a live stream, there's always the option of live questions and further discussion, which is ultimately what we want to provide. Early on, we're just going to pose a question, we'll answer it, and we're going to close up shop. But as we move along, we're hoping that people will begin to participate. But we understand that's going to take a little while. So in this new format, and I'm almost done, in this new format beyond today, we may ask and answer questions in as little as 10 minutes. It could go really fast. Or I can see where a conversation with viewers could last half an hour or whatever it takes to get them through a particular issue. So it's an open format, but initially beyond today, we're going to be asking questions and answering them, and we'll try to make it as entertaining as possible. So in either case, we're going to be hoping to provide the answers people need most to improve their lives. And that's the point, is to be as helpful as humanly possible. I mean, I really hope you'll enjoy the format. We don't exactly know what the shape is going to be yet, but all Rodney and I want to do is be as helpful as we can for you. So I know that was a lot, but I owed it, I think, to in a pivot, to people to explain why you're doing it. Any thoughts, Rodney?
No, I like it, and I'm the same as you. Although I love our banter on here when we get going, talking about useless stuff that can help nobody. But in all seriousness, I mean, when you're looking at a video and if it's designed to be helpful, it needs to be concise.
Yeah, and that's really that's the whole point of this thing. So, and I just want to say, Ange, and I did a live stream last night, and sure enough, Ange was there. She's
Nice.
She's my favorite. I did a Williamson County overview, and there she was. It was really cool. I was a little bit, without Rodney to bounce things back and forth, I was like nervous. She'll tell you.
Man, if I'd known you was on there, I would have been in the chat box for sure.
Maybe that's, yeah. Come in anonymous and start beating me up.
Yeah.
So anyway, so here is how we're going to start this thing, and it's going to go this way. Did you have any other thoughts? I don't want to move too quick, Rodney.
No, I'm also, no, this is good. I like it.
Okay, here we go. So here we've got an overview of home loan products, and I'm going to pull up each one as we go, Rodney, but if you just want to kick us off.
All right, I apologize. I'm going to look over to the side a little bit. I got some notes over here I wanted to just make sure I hit the highlights on. Number one, conventional loans, right? When we're talking about loan products, conventional loans hit the majority of probably of the loans that are done in America. And I'll just quickly run through a couple of advantages of the conventional loan. Mortgage insurance not required if you're putting 20% down of the purchase price. And if you don't put 20% down, say you start out at 10%, you can cancel that mortgage insurance later down the road when you get to that certain point. Okay. Conventional loan covers a variety of property types, condos. It's pretty much covers them all. They do give you program options such as, you'll have your fixed, your arms, and items like that. And one thing about a conventional loan, you can have numerous of them. Now you can have as many as the lender will allow you to have. I mean, Fannie Mae doesn't have a requirement. But a lot of lenders have a requirement saying you can only own 10 as an investment property. So just depending on what investor you're with is, but Fannie doesn't have a maximum loan limit.
Okay.
Disadvantages. A higher down payment is required, right? So it'd be a disadvantage to say somebody who didn't have the funds to put down the money. I don't always think higher down payment's a disadvantage, but it is if someone who doesn't have the funds, right? And now I've highlighted that on my note because Fannie Mae does have a 3% down. It's just a little bit harder to qualify for than your say when we compare it to an FHA loan at 3.5% down. Okay.
Is that because of credit requirements?
Yes. Yes.
Okay.
Yes. And that was you stole that one right out of the book here for a disadvantage. It does require a higher credit score requirement for conventional. It's also maybe more difficult to qualify for the conventional than an FHA loan. And mortgage insurance is still required loans above 80%, which I really don't think that that's a bad thing. I just think it's not as good, or it's really not a disadvantage because almost everybody else does too. That's why I had that one kind of highlighted as well. Although it's still required over 80%. So basically your conventional loans is your big vanilla box, right? It covers most people with good credit, most properties. It's the majority. It's by far the number one loan done in America.
That's amazing. That's amazing. I always figured FHA would be.
FHA, we'll go into some government-backed loans, which we have FHA and VA. They're government-backed options. The FHA, I really like this statement, and I stole it from this thing right here, is best known for their flexible standards. And FHA loan can still grant money the opportunity to own a home despite having a weak credit history or running into difficult financial circumstances. Okay, so the FHA loan is specifically set up to allow for a little less credit score. I think FHA goes all the way down to 500 credit score with like 10% down. So they really go down there. The one of the really good thing about it is I really like the down payment assistance, the down payment loan on this. It's 3.5% on an FHA loan. And also you can couple those with down payment assistance loans. Like each state has, almost every single state has their own down payment. Some have multiple. Like we have Tennessee Housing here. We have Nashville Housing Fund and things like that couples with these lower down payments to help people get in. Like I said before, more lenient credit history. And actually, a lot of times it's a better interest rate. If you government loans right now in several years have been better interest rates than conventional. And they have lower debt to income requirements, meaning the DTI is a little bit more flexible. If you've got a little bit more debt, it may approve you on a back end ratio a little bit higher than it would on a conventional loan. I said, go ahead. Let's see that question. That seemed to phase you right there.
Are there very many people that could go conventional that go FHA? Or
not usually.
Is that because of the MIP problem?
Yes, one of the and I hate saying has a disadvantage of an FHA loan is I hate saying they have disadvantage because they're designed to help first-time home buyers and people with maybe some credit issues or credit issues in the past realize home ownership. Okay, but yes, one of the things, the downside of an FHA loan is if you start out with mortgage insurance, you're going to have it for the life of the loan. They just don't let go of it. Okay. And it can be an expensive, they did lower it this year. So you've caught one of our podcasts earlier in the year. They did lower that fee to help the strain on affordability. So that was good. But that is the downside, is that your MIP will not come off of FHA loan. If you start out that way, you'd have to refinance, and that's fine because people buying this, using this FHA loan is usually going to move out within several years. Right. They'll have a family, get better jobs, things like that. So this loan's not permanent by any stretch of the imagination. So, um, although it's 30-year fixed, so it's pretty permanent. Now, I wanted to go over a big misconception on FHA. Sellers often perceive the FHA loan has a stricter appraisal and property standards. I think that's a huge. That's not a misconception. I think sellers feel like when they get an FHA appraisal, they're a little bit more nervous when they find that out. Or, and it really applies somewhat to VA as well. What I'll say to that is appraisers have to inspect the attic and the crawl space versus when they do a conventional loan. Okay, that's one of the major differences. Like the appraiser actually has to see all four corners when they get in the attic and the crawl space. Okay,
Right.
usually does not cause zero problems. Those two actions right there. Now, what they're going to look for is they're going to keep a closer eye out on safety issues, like if a plug is coming out, or their electrical outlet's not looking good or something like that. It's usually a safety issue, which 9 times out of 10 would have hit a conventional loan appraisal anyways.
And can I add something on that?
Yes, 100%.
When for real estate agents, and that's where the misconception has been propagated. Really, generally speaking, if somebody is concerned about a VA or an FHA loan because of that, it's because their house is hiding secrets of some kind. Generally speaking, not always. Sometimes people just want a flawless pathway. But if an appraiser comes in and finds an issue, it used to be back in the day there was peel and paint. Or at least one guy busted us for it. Whether it was legit or not, we still had to respond to it. But that's called a subject to. And so if an appraiser comes through and finds no handrails on more than 3 steps in the front of a house, I'll give you the value of the house subject to you getting handrails put on those front stairs.
Right.
And so when real estate agents sellers start to think that it gets complicated, it's really safe. It's almost always safety issues.
Mm-hmm.
I would think probably 100%. Anyway, just wanted to throw that in. But that's where the misconception comes from, and they're hiding something usually.
Yes, and it's that they will look for safety issues, and they will be more stringent on those appraisals. But the thing that it's the same appraiser. Like if I was doing a conventional loan or I was doing an FHA loan, it's going to hit the same time, right? So it's going to hit the same exact appraiser, and they just do two different. It's on 2 different reports. And when people find that out, it's like, oh, well, it's the same person doing that? Yeah, except in the circumstance of sometimes or most of the time your VA appraisers. They're their own category. But like you said, it's mostly safety issues. And then the last thing I think they look for on government loans is that there's no major repairs in the foreseeable future. Like they're not going to get up and inspect the roof or anything, but they are going to, if there's a tarp on it or something, it might cause an issue, right? I mean, so they're going to want the house to be in decent shape for a few years after somebody with a low down payment buys it.
Yeah, and remember the whole point of those kind of rules and regulations, outside of value for the lender, when we're talking about appraisers here, the rules and regulations are designed to help a consumer get a good product. That's it. It's not anti-seller. It's just seller. If you're selling a house, it needs to be up to snuff relative to some rules and regulations. That I think that would be an accurate statement.
Yeah, it's the collateral, right? It's the collateral being held. So they're going to want to, the lender's going to want an inspection on it, which is an appraisal, and have their, I's dotted and T's crossed to make sure that the collateral, what they're lending on, is appropriate. So,
Yep, got it.
Now, like I said, the VA has some of the stigma attached to them as well, but it's a really good loan. Of course, the VA is just 100% loan for the veteran. And one of the great things about the veteran loan is the whole VA department, I feel like, is I feel like every decision they make is, if you do a bunch of VA loans like we do, you're always talking to the VA. What do you call? I lose my train of thought. Just say the VA office. And every time we have a conversation, they're always trying to do what's in the best interest of the veteran. Okay,
Yeah.
it's not the best interest of the VA. It's not the best interest of the mortgage lender. It's the best interest of the veteran, and that gives you a really. I just like that because they're really focused on taking care of their veterans and making sure we're making the best guideline decisions to help them be successful in home ownership and things like that. So I'm a really big fan of the VA loan. The only trick is you've got to be a veteran, right? I mean, it's not open. You've got to have your veteran eligibility, or else I'd give it out to everybody. um,
My dad was in the Navy. Can I get a VA loan?
No. Not legally. Not legally.
Okay.
I can tell that's the other show at 2:00. I will show you do that.
Behind the scenes.
If there was a downside to the VA loan, they have a funding fee of 2.1% up to 3.3, depending on if you've used it one time or two, or multiple. But it's a 100% loan. That's the good thing about it. So if you're always doing a 100% loan, that fee is very reasonable, in my opinion, for that. You probably want to do away with it, right? If you were putting 30% down, if you're a general and it's your fourth house,
right,
you'd probably not use the VA loan.
Okay.
Another good loan program is what we have around here. It's called our USDA loan. It's also known as rural housing. And if you're old as me or close to that, you might have heard farmers home loan as well. All of those are the same loan program. It's a government loan, backed again by the government loan. It's a zero down, but the tricky thing about this one, it has income limits that you have to meet. It may be 100% of the area median income or something like that, but it has income limits, and then it has a census tract of where these are eligible. So you're not eligible just to go into a major city and get a USDA loan. What you have to do is basically if you find a house and you go to USDA's website, you can type in the address and see if it's eligible for a USDA property. But typically it's a more rural property. And you can kind of keep in mind, it's not crazy rural because they don't update the maps all the time. Say what's rural 10 years, what's rural now wasn't rural 10 years ago, right? Or vice versa. So USDA, they got a couple great advantages of the loan. They got a low down payment. They got reduced MI, and they got great rates on them. And it's a great program for another way the government helps subsidize getting people in first homes.
And generally, with the USDA, am I correct in assuming, and I know it's by zip code, but generally speaking, it's in areas that are less populated. Is that true?
Yes.
Okay. So when somebody says,
I call it rural, but I don't know, it necessarily doesn't have to be rural or whatever.
Yeah, right. No, yeah, I didn't put that together for some reason, because I know when somebody's looking for a little elbow room using phrases like that, I don't want to live right next door to somebody, those kinds of things. That generally brings to mind that could be a possibility. So exactly. I apologize for not. I did hear you say rural, and it didn't click. So sorry.
Don't let it happen again, Andy. I mean, it's going to hurt.
I'm going to flog myself. I'll be right back.
Hey, Angie's got a question here. If you want to throw that in.
Yep, you betcha. Thank you for that. Sorry, Rodney. How hard is it for retirees only having a pension as income to get a loan for around 20% of the purchase price?
I mean, let's just say all the other factors are okay, credit, but pension as income is as good as gold. I mean, it's as good as any other kind of income that there is. It doesn't matter if it's pension, retirement, W-2, self-employed. Income is income. So as long as the income and that debt ratio works out for Fannie's requirements, it seems for 20% of the purchase price, that seems like that would be the easiest loan I'd done all year. Because people think, I don't know if you're saying that because you're worried like pension income may not be, it's counted just like regular income. So it really doesn't matter if it's pension or what.
It still counts as real money is what you're saying.
100%. Hey, actually, sometimes more than 100%. Sometimes you can gross it up if they're not paying taxes on it.
Ooh, I like to gross things up. Wait a
Hey, I got one more here. Qualified mortgages or non-qualified mortgages. Basically, QM loans, qualified mortgages, meet all the requirements of the Dodd-Frank Act. And qualified what that means is there's no risky loan features. For an example, balloons, interest only would be a risky loan feature. Negative amortization, like when you make your payment, you're not paying all the interest or the principal, and it just your balance is getting bigger. Things like that. Acceptable debt to income ratios. Basically, what happened is after the crash of 2008, Dodd-Frank come out and rewrote a bunch of rules about if loans are going into a pot called mortgage-backed securities, they're going to be underwritten. They're going to be the best loans that we can produce, which is a QM loan. It's backed by the government. It can go into a mortgage-backed security. It's underwritten to certain standards. Okay, a non-QM loan is not that. It doesn't mean it's necessarily bad, but I'll give you some examples who would benefit from a non-QM loan. Somebody self-employed that has a ton of money running through there, but is writing everything off. And let's say that self-employed buyer, there's certain things that they have to do to show that they actually are bringing that money in. So it's not just a really easy kind of thing there. Again, business owners, even with people with extensive levels of debt, like I've seen this be a good, say they qualify, but their business has loan repayments that is due within a year, and they don't have notices that they're going to be reissued or whatever. Things like that. Real estate investors, somebody with a bunch of properties that may need to buy one like that. So non-QM is just, I think of it like it as investors that say, we like the risk tolerance for a conventional or FHA loan, let's say, is a 9 out of a 10. It's a really good loan, but they're fine with a 7 out of a 10 risk. So what they do is they can look at some of these factors and say, okay, well, if I remove this qualification from that program, I could have this program non-QM, I could capture this many people, and I think the foreclosure ratio wouldn't be bad. So that's where they come up with this program that tries to catch people that just doesn't fall into every other category.
Right.
So.
Okay. All right. So that's really good. We've got, Angie's got a further question. Let's, if we don't mind, if we can.
Oh, yeah.
I'd prefer paying the whole thing off. My husband is thinking there'd be a tax advantage to owe a small amount.
I would check with an accountant for sure, because you have to have a decent sized mortgage to meet the minimum requirement anyway, to beat the minimum requirement of mortgage interest, don't you? Isn't there a minimum amount of mortgage interest on the tax line, or do you know, Andy?
I don't know. I really
Yeah, I
don't know.
don't know. Yeah. I would definitely check with your account, because if you're not paying a whole lot of interest, you may not meet the minimum deduction. And if that's going into your equation,
Hmm.
um, you may be paying it off maybe better.
Right.
Which I'm not a big payoff mortgage person. I don't know, especially right now, like it's kind of difficult right now with that theory, because normally if you can get 3 or 4% interest or 5% interest, sometimes you can get a little bit better than that in the market. So
Did you see? We've got a live one here. Okay.
yep. Wives win all the time. I don't know. I don't know if she had to declare that or not, but that's how it normally works, anyways. In the way, Andy.
she's she's excellent. So that's excellent. So okay, so Ronnie, we've got conventional loan, which is for people that are these different categories. There's no judgment one way or another. They just fit different people's circumstances. One a little better than the other, conventional versus FHA, with a little more lenient elements to it. The USDA, which is really an article of its own. That's
Hmm.
just they're just trying to populate less populated areas, and then you've got the non-QM, which is I would expect the pretty well to do. Would that be a qualifier in there? Maybe not. Maybe not.
The pretty well to do.
Yeah, for non-qualifying mortgage.
It's honestly, it catches kind of both ends of the spectrum. It
Oh, is that right?
catches, yeah,
Mm,
it could catch somebody like I've got somebody right now buying a jumbo property with a non QM,
got it.
um, and then I've got some other people that their tax returns don't look so great, but they've got their bank statements look really good. So the bank statements actually provide or where the income comes from. So
Got it. Okay.
it
Well,
hits kind of both. It actually hits. It's just nothing in the middle. It's both spectrums. It's both sides.
that's interesting. That's interesting.
Yeah.
So I want to thank everybody that has tuned in as replays. Thank you, Ange, for being here. Um, I'm going to put everything in chapters so that they're easily found. In other words, each of these categories of type of loan, I'm going to chapter these out so that you just click and you go directly to it. And I hope that was helpful for everybody. And that is going to be it for us. Any final thoughts, Rodney?
No, that I like it.
All
Good
right.
job. Thanks,
All right,
Angie.
man. Talk to you soon now.